Hi, I'm Ali. I'm an academic researcher and the host of ThinkCraft, this podcast where we talk about educational policy. Next week, our guest, Robin Gates, is going to talk to us about a host of different issues related to nursing education. And I really enjoy speaking to the guests that we have lined up. And I can't wait to talk to them on the microphone. But the show was created with guests in mind, people who could add context to the educational policy issues that pique my interest. And I think if more people understood them or heard about them, it would pique their interest too. Education is just synonymous with the economy in a lot of ways. It's whether you're a student or not, whether you graduated or not, whether your job requires it or not, the changes made to education and the policy framework surrounding education will impact you and your household. And a lot of changes in educational policy have occurred or been signed into law in the last couple of days. So, as I'm recording this on July 9th, the Big Beautiful Bill or the One Big Beautiful Bill Act was signed into law by President Trump. And the presidential administration has been hyping up this bill for a while. I think there's something uh, humorous about the name Big Beautiful Bill. And it is frustrating to think about a big bill for a lot of Americans because that's a way to make a bill hard to agree or disagree with, right? When you tack on a bunch of different stances for a bunch of different issues and a bunch of changes, uh, it makes it harder for your representation in Congress to say this bill is bad or this bill is good because they are able to slip in things that aren't so popular with the voting base. Uh, but ultimately, this bill, the Big Beautiful Bill, and the One Big Beautiful Act, is a budget reconciliation bill, which means that it's a 1,000-page document, at least in the way that it's going to change student borrowing, student loans. Um, the package impacts higher education specifically. So, as I break down what the One Big Beautiful Bill Act does for student loans, all the education reforms, as far as I can tell, and based on a couple analysis that I've printed out here for reference, these are all higher education reforms. So, K through 12 education is not something that was tackled in the One Big Beautiful Bill Act, and uh, being optimistic, supposedly, this will save the country, save taxpayers 349 billion dollars. That's according to the latest figure from the Committee for Responsible Federal Budget. Um, but unfortunately, for students, they won't be in such a great situation. So the law is eliminating most student loan repayment options, and it caps graduate level borrowing, and tightens it tightens your wiggle room on deferment and forbearance and other types of collection policies that may be useful. So if we're going to go through those different things. If you're unfamiliar with the terminology, just know all the conveniences, the few that exist for student loan borrowers, are either getting capped or are, you know, in some way going to be less convenient. There is less empathy, I guess you'd say, overall for the student loan borrower payer. Um, and so I want to go through the bill real quick and tell you what's different for those who have loans or what's different from the status quo prior to the Trump administration. And then I want to be fair and give the argument that the conservative think tanks and policy analysts who are toting this bill and bragging about this bill's impact to student loan borrowing and federal spending, uh, what their rationale is for why this is a great thing, and why they put that there in the first place. And I have a little speculation for that. So, the first thing, if you are a student loan borrower already, there's a lot of acronyms involved. You may be a part of the SAVE plan. I'm going to be mentioning these Biden era student loan acronyms. SAVE, PAY being PAYE, REPAYE, same too, all caps. Um, this law, or this bill rather, wipes out these different menus of slightly confusing income-driven repayment plans, and instead it creates only two options for federal student loan borrowers. So there's the standard repayment option, which very little people use. That's a fixed monthly payments with a 10 to 25 year timeline, depending on your loan amount. Um, but most people have been using these income based or income contingent repayment plans. Those are no longer an option. Instead, your IBR or your ICR would be replaced with a new RAP, a repayment assistance plan, which is a long haul option with 30-year forgiveness, scaled to income, but with higher minimum payments than the save or pay ever required. Uh, what does that mean exactly? I have some numbers that will break it down. So the if thanks to the Senate parliamentarian, by the way, if you have a existing income, an ICR, an income contingent repayment plan, or an IBR, an income based repayment plan prior to 2008, then you are grandfathered in. But for all new loans after July, uh, those are no longer an option, and the RAP is replacing it. So the RAP is supposed to consolidate all their language is confusing repayment choices into one main option. Again, you'll see a lot of people talking about uh, the Big Beautiful Bill Act's impact on student loans as if it's only one option. That's just because the standard repayment option is something that's not very useful at all, and the thing that's getting replaced here is your Biden era saving plan, repayment plan is being replaced with the RAP. And instead of taking a slice of your income, the way that that save plan does and many other similar plans that were offered in the past, the RAP, that's the Trump era bill, looks at your entire AGI. So that's the adjusted gross income and charges a small percent of every dollar. So just to understand what that means, 1% of AGI income is 10K to 20K. That would be the income that we're looking at. 2% from AGI would be of 20 to 30K. And that pattern continues of 1 percentage point per 10K until capping at 10% once the income tops 100K. So even the lowest income borrower under this new plan must send $10 a month. And like Save, like the older plans, the RAP cancels any unpaid interest each month, so balances can't grow if you make your required payments. Anything left after the 30-year window is forgiven. So 30 years in months, so that's 360 payments. So let's talk about how this is different than the Biden era and existing income, ICRs, IBRs, SAVE plans, all those ones prior to it. SAVE is the most affordable income driven plan for most people because it disregards the first $35,000 of income for a single filer before calculating any payment, right? So that's a poverty prevention measure. That is gone. So the new student loan system, your only options, the two options, which most people will only see it as the one option, the RAP, does not, there's no income being ignored. Prior to this, if you have some student loans out right now, then you'll know what I'm talking about when I say 35K when assessing your income for federal student loans is just considered like, well, that's what it takes to survive. That's not how they're gonna price and scale what you'll be owing over time. And the RAP gives you 30 years, which is more than the 25 years for undergraduates, although graduate school adds another 25 years or so. So it does give you more time, but the RAP, the new plan, the Big Beautiful Bill Act student loan repayment plan doesn't ignore any income, but it's a percent of income that starts low and rises gradually. So one more number example before I move on here. The old plan, that would be 15% of your income, if that's the deal you made, is cheaper than 10% of your income under the new plan. So 15% of the IBR is your discretionary income, your AGI, minus 150% of the poverty line for your family size. All right. That means if you have like 5 or 4 kids, you're going to get a huge deduction, like 60,000 or so. This new plan, it's 10% of your AGI minus $50 per month per kid. So it makes a huge difference when we're not doing that poverty reduction prevention measure. So by 2028, this transition will be complete. Payments will be recalculated, and that just means higher out-of-pocket costs each month. If you have existing plans, you still have some time. The next thing that's most notable is if you're planning to go to grad school or if you're in grad school and want to go further, this law permanently caps how much you can borrow from the federal government. The idea here, when reading what the AEI, the American Enterprise Institute, had to say for these caps, is that if you're going to be a doctor, if you're going to get that graduate degree, then it's assumed that you're going to have a high paying job. Therefore, these loans can be paid off, and you shouldn't have to borrow so much in the first place. I would love to speak with graduate students and hear what they think about that. But the permanent caps from how much you can borrow from the federal government for graduate school and professional schools, master students, it's 20,500 per year, so 100,000 total. Professional students like med school or law, that's 50,000 per year, so 200,000 for a lifetime. And parent plus, that's capped at 20,000 per year with a maximum of 65,000. Folks listening to this who don't have any student loans might think that those are reasonable, and in a way I agree with you. What's unreasonable and unfortunate is how much school costs, how much tuition costs, how much graduate schools and their students are willing to go into debt in order to get that degree of that idealized job that's going to have you set for life. So these types of students, the ones who are going to graduate schools, folks like myself, and especially medical and dental school, things like that, they'll be pushed into private lenders, getting private loans, not federal loans. And the bill really boasts and brags about that and sees that as a good thing, which is a larger conversation and political divide. Overall, folks who lean more left are anti the privatization of education, much like very much a parallel to healthcare. So in the end, really, who are the losers of this new change for the Big Beautiful Bill Act? Graduate and professional students. Their programs are going to cost much more. I would be surprised if the numbers didn't go down for future doctors and aspiring researchers and lab technicians and what have you, because that payoff promised to you for those guaranteed good paying careers can no longer compete with the exuberant and scary private loan system and what they have to offer and the repercussions there. Low income borrowers, they're going to lose their income driven plans, which were tailored for their circumstances. It was tailored with them being low income in mind. And future borrowers, they're going to be exposed to stricter rules and fewer protections and more private debt reliance. And so we can't forget that this bill does nothing for the existing borrowers who are hoping for cancellation. That door is closed. The winners of this would be very high income professionals, so they could afford that rarely used standard plan. That the standard plan is much more of a putting something on layaway, paying something in installments. It's much less of a loan and more of a stretched out payment. The federal budget, they argue, is a winner. It will see reduced long-term exposure from forgiveness plans and apparently save 349 billion. And private lending firms, of course, private lenders will see an increase in their market. The new law ends the economic hardship and unemployment deferment for all loans dispersed after July of 2027. So you still have another year before these following things kick into action for your situation. But forbearance, which is like a pausing or a postponement of having to pay back a loan, it still exists, but it's going to be capped at 9 months. Forbearance is also when they lower your repayment amount. That is now capped at 9 months, and interest will always accrue during that period. And even more troubling, I think, is that the collection powers are restored and expanded. So, unlike before with the federal student loan program, if you defaulted, there was something for you. If you default now, the government can garnish 15% of your wages. Garnish just means to take your money before it reaches your bank, seize your tax refunds, and deduct from your Social Security checks. So I'm only 28, but this marks a return to the pre-Obama era of like aggressive federal debt collection. As we close out today's episode, it's important to name what's often buried in these big bills. No pun intended. What's often buried in policy language. The One Big Beautiful Bill claims to simplify federal student aid, but in practice, it redraws the boundaries of who can afford to pursue higher education in this country and who can't. By capping Parent Plus and Grad Plus loans, the law effectively shuts the door on entire communities, especially Black and Latino families who have historically relied on those programs to bridge the funding gap. These are the very families already facing systemic barriers in admissions, retention, completion of the degree programs, and race relations within school has been fraught since Brown versus the Board of Education. This is a uniquely treacherous and ongoing way of ensuring that someone has to fail, that a richer household's success in higher education and the careers that come after that has to be built in a way where someone else does worse. We'll keep watching, we'll keep asking questions, and here on ThinkCraft, we'll keep naming the policies, and we're going to start naming the people at the center of the stories. Thank you for watching. Thank you for listening. Yeah.